Hello guys, let's look at the difference between monthly compounding and daily compounding in a money market fund. In Kenya, we only have a few money market funds that do daily compounding, where most they do monthly compounding. And remember, there is a difference between daily compounding and crediting your account daily. When you're doing your due diligence or when you're reviewing different money market funds, you might have come across statements like the interest is calculated daily and credited at the end of each month. So this is very different from daily compounding. So maybe do a little definition before we go to the calculations. We see what these terms mean. And even in the examples, we're going to use numbers so that we make it easier for you. So daily compounding means if, for example, you put like 50,000 Kenya shillings today in a money market fund account and you earn 200 by the end of the day. And guys, the amount that I'm using here for the example or for the definition is not what you earn in a money market fund. We look at the exact amount after explaining what these concepts means. So if you put 50,000 Kenya shillings in a money market fund that does daily compounding, in day one, your interest will be, for example, 200, yes? And then day two, the principal amount now will be 50,000 plus the 200 you earned in day one. And then the interest for day two will be calculated using 50,200. Then on day two, the interest will be 200 plus something on top because the principal is different. And then the day two principal now will be, the day three principal, sorry, will be now 50,400 plus the little amount that you earned in the previous day. Yes, so that's how it works. So what this means is the interest you earn today will be different from what you earned yesterday, and the interest you will earn tomorrow will be different from the interest you earned today. So every day there is an increase in interest because what they are using to calculate your interest is the principal amount plus the interest that you have earned the previous days that you have been in that money market fund. So in the long run, this makes a lot of difference in your account. The account keeps growing because they're doing daily compounding. Now, for monthly compounding, your interest will be calculated at the end of each month. So what will happen is throughout that month, you're going to have the same amount of interest throughout the month. For example, in month one, you will have your principal 50,000, and then day one, your interest will be 200 Kenya shillings, day two, 200 Kenya shillings, all the way to maybe the 30 or the 31. Okay, so in this case, for example, at the end of the first month, the total interest that you'd have earned will be 6,000. And now in month two, they will add that 6,000 to your principal, and now they are going to use 56,000 to calculate the interest for that for month two now. So you'll be earning 200 plus something on top because now we have an addition of 6,000 for the whole of that month until now date 31. And then at the end of that month, then you'll have your total accumulated or accrued interest, and then they will add that to the principal to calculate the month three interest. Yes. For companies that say they calculate your interest daily and credit it at the end of each month, what this means is for money market funds, when we are looking at interest, sometimes the interest vary from week to week or day to day. So what they will do, they will use that interest rate for that day to calculate your interest accrued or your interest earned for that particular day. Yes, but then they are going to credit your account at the end of the month, meaning that you can only access that interest at the end of the month. You can't withdraw that amount in between the month. So today we look at the numbers to see whether daily compounding makes a big difference in the interest you're earning. This will help you make a decision on which money market fund is best for you, whether you can compromise on other things for the daily compounding, or you can just forego the daily compounding because it doesn't make much sense. You're going to see that. So let's get into it. I did this, the calculation, as you can see in this table, I did this using Excel spreadsheet, and I compared this with what you would get with a money market fund calculator. From my experiment or little research, I would recommend that you use Etika Money Market Fund calculator to do daily compounding calculations. And for monthly compounding, you can use Lofty Coburn Money Market Fund. Okay. So in these calculations, we are using 15% per annum interest rates. I will explain the first row, and then maybe you can pause the video and go through the other amounts that you have calculated. So if you invested in a money market fund that offers monthly compounding in year one, the total amount of money that you'll have in that account is 58,037 Kenya shillings. And you can see year 2, year 3, year 4, and year 5. Then the reason why I put year 5 here is because you'll notice that at the end of 5 years, the amount of your initial capital will have doubled for all these amounts. For 50,000, you'll have 100,000 plus. For 1 million, you'll have 2 million plus in your account. I thought that would be very important to maybe highlight. Yes, the second table, we have monthly earnings. So if you invested in a money market fund that does monthly compounding, this is what you'd be earning every month in that money market fund. So if you invested 50,000 Kenya shillings, in year one, at the end of every month, you'll be getting 777. Yes, in year 2, you'll be getting 902, and so on. You can pause the video and look at the other numbers for the other amount. Yes. Then we have daily compounding. For 50,000 Kenya shillings in year one, the total value of your account will be 58,089. Year 2, you'll have 67,488. You can see year 4, we have 91,094 Kenya shillings. And then at 50,000 Kenya shillings, you'll be earning 783 Kenya shillings. In year 2, every month, if you had 50,000 Kenya shillings, you'll be earning 909 each month, and so on. And now to the main part of this video, where we are looking at the difference between daily compounding and monthly compounding. So I think it's important to say, in a daily compounding money market fund, you'd earn more than in a monthly compounding money market fund. So if you invested 50,000 Kenya shillings in a daily compounding money market fund, you'd have an extra of 52 Kenya shillings as compared to someone who invested in a money market fund that offers monthly compounding. And in year 2, you'd have an extra of 121. In year 3, you'd have an extra of 211. And you can see the rest of the table. And from this, you can see that when we are talking about larger amount of money and a longer period of time in a money market fund, you can see the difference is a little bit higher. And I think this is daily compounding is something that you should consider. But if your goals are short term and also you have smaller amount of money, I think you should look at the other benefits of that money market fund and don't concentrate so much on daily compounding. But if you have larger amount of money in a money market fund, or you intend to invest for a longer period of time, I think daily compounding will work very well for you. Thank you for watching. I hope this will help you make the decision on which money market fund you're going to start investing in. Bye.